Good afternoon, everyone, and welcome to today's uLaw webinar. The topic for today's webinar is Disbursements Demystified. I kindly request everyone who's joined me today to mute their phone lines and use the chat window at all times to ask any questions that you may have with regards to the webinar. This webinar is being recorded and will be available to you as early as Monday next week on our YouTube channel, uLawPractice. Today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. And the title for today's CPD webinar is Disbursements Demystified. Now, like every other uLaw webinar, today's webinar has a very specific agenda, of course, given the CPD nature of it as well. We're going to talk about disbursements, how best to manage these disbursements as a legal firm, of course, and talk about the multiple vehicles that you have, financial vehicles, such as the trust account, as well as the general account, that you could potentially use to manage and pay for these disbursements. And we'll talk about some of the types of disbursements, both from a trust perspective as well as a general account perspective, and some candidates that are likely better suited for general accounts over the trust accounts, for example. And last but not the least, we'll look at some of the law society's bookkeeping requirements as well as audit requirements when it comes to how best you reflect these financial transactions called disbursements across ledgers, journals, and other documents. Okay. Once again, today's webinar's title is Disbursements Demystified, and I welcome everyone today, and please do use the chat window at all times. So moving forward, really talking about what is a disbursement. A disbursement, as we define it in terms of layman's terms, is really an expense that your legal office incurs on behalf of a client, or to be more specific, on behalf of a client matter. So it's expenses that you do incur as a business, but it is the nature of the expense that is that it's spent by your legal firm on behalf of a client, and more specifically for a specific matter, especially if you're dealing with multiple matters for the same client. And from an accounting perspective, what that really means is that you as a legal business or legal firm have the obligation now to record this financial transaction, recording important aspects or attributes of that financial transaction, such as when did that financial transaction occur, what was the amount for that transaction, what was the reason for it, how did you end up paying for it as well. So some of the attributes of those transactions, it's important that you do record it in your books so that now you can balance that with regards to the actual amount spent and the fact that this is an expense that has been incurred on behalf of a client. You have the obligation, of course, to invoice and reflect that transaction, especially if it's a general expense or general disbursement, because it is a recoverable expense in nature. And from a law society audit perspective, as I mentioned earlier, there are ledgers and journals and disbursement journal, for example, that are asked for during an audit. Now, how does a legal firm manage these expenses or disbursements that you come across for a legal matter? One of the advantages that you have as a legal firm is the ability for you to utilize this vehicle called the trust account. One of the very few businesses that allows you to maximize and utilize that vehicle, a financial vehicle called the trust account, where you do accept money as an advance that you then park in your trust account, and as you invoice your client, you now enable certain eligible amounts that can then be transferred from the trust to the general account. Now, law firms sometimes utilize the use of the trust account, and something that we recommend and certainly talk about in a lot of our webinars, because this is money that was never yours to begin with. This is an expense, and if you have the opportunity and have the process within your business to be able to pay for these expenses through the trust, what that really does is that it reduces the amount of bookkeeping that is required from your behalf with regards to recovering that money. So, for example, if you've got, say, legal fees of $1,000 plus taxes of $130, and if you, based on your experience, understand there's maybe around $200 to $300 worth of disbursements in a particular matter, asking for a retainer upfront for $1,500 gives you now the flexibility to pay for those $100, $200 right off your trust account. Okay? Paying right off the trust account automatically reflects in your invoice when you include that legal fees, if you do, and one step reduced in order for you to recover, because there's no recovery process. You have actually used the trust account to pay for that disbursement directly from that. In terms of whether you use the trust account or the general account for paying these disbursements, as I mentioned earlier, from a record-keeping perspective, you are still required to capture certain important information, pieces of information around that disbursement. I mentioned that briefly in my previous slide. Information such as when was this disbursement paid? So, of course, the date. How is this disbursement paid? Now, some disbursements, especially if it's a general disbursement, may be paid out of an individual or a lawyer or a owner of a law firm from their own pocket. So this is their personal money that they sometimes may have used, a personal credit card, if you're using fax, examples of postage, paper. These are great examples where you may end up paying for it from your own pocket. So it's very important that you capture it, so when you recover that money from your client, you now have the record keeping to say that that money is now owed back to you. Or if you're using your general operating business account, then it's important to park it there. Or if you're using the trust account, of course, then you say that you paid out of your trust account. So really, when was it paid? How was it paid? And it always helps, and it's certainly an important component of the bookkeeping documents, allowing you to capture the reason for the expense. So, as I mentioned earlier, is it for fax, paper? Is it a court fee, an application fee? So there could be many different types of disbursements that you come across. So in a real estate matter, you may have land transfer tax, you may have search title fees. There's various different types of fees that vary based on the nature of the matter itself. Something that's more important than all of these details is who was this disbursement incurred. So hence it's important that you certainly have a process to capture the client's information. So which client was this for? Whether that's a private client or a corporate client does not matter. And even more important is that you further subcategorize the expense under a file or a matter for that client. As I mentioned earlier, especially if you're dealing with multiple matters for the same client. Now, as I mentioned, you have the trust account to pay for, you have the general account to utilize, these two wonderful financial vehicles to pay for these disbursements. Something to keep in mind if you are using the general account, which we find often is the case, keep in mind that you then determine what portion to invoice and when to invoice, depending on the engagement or the retainer letter. If you're dealing with corporate clients and if you've signed up for a monthly bill which includes all of the fees and disbursements that you've incurred during that time period, then of course you ensure that you're capturing all these details methodically, and at the end of the month you generate this one single bill. If you're dealing with other types of files or matters or clients where you're going to be invoicing as and when disbursements occur, which is highly recommended, then of course you would follow that cycle of invoicing. But it's very important, especially if you're using your general account, because this is your money that you've already paid on behalf of the client, and hence it's important to be diligent and vigilant, in fact, to be able to record those transactions so that you can recover that from your client. And then comes the question of, okay, I have these two wonderful financial vehicles. Are there any differences between how I use these two accounts? I do apologize. I just see quite a few people looking to join. So comes the question of how do I spend the money, and depending on whether the trust or the general, what kind of information do I capture, and why is it important for me to know these options? A general thumb rule, what we talk about is if your law firm is incurring these expenses where it's based on actuals, so what you've paid to the final expense is exactly what you're going to be recovering from your client. So what you paid is what you get. You paid $200 for court fee, you invoice $200 as a disbursement to your client, then the trust account is a great vehicle to utilize. The information that we mentioned in my previous slide remains to be the same, capturing the date, recent client matter information. Okay? The fact that it's not your money to begin with, just transacting it off the trust account just makes it, as I mentioned earlier, easier on you as a law firm to do bookkeeping, because it reduces at least one extra step. Okay? The importance is when you do pay it out of your trust account, that money is taken right out of the trust account, and you do not have to pay for it in advance, invoice it, and recover it. Right? If you're paying off your general, and let's say the types of expenses is really not the actual. So for example, if you're either looking for an extra profit or if you're unfortunately looking at a loss, what you've paid and what you're asking as recoverables are different numbers, then most certainly you do have to use the general account as a good thumb rule. The information again remains to be the same, capturing the date. One extra very important component to capture, of course, are the taxes based on the type of disbursement, if there are any taxes involved that you've paid for, because that needs to be reconciled as well. Okay? And if you're paying this out of a general account, then one additional piece of information that would vary is really the method of payment. So did you use your own personal funds to pay for it? Did you use the operating general account to pay for it? Was it a business credit card that you'd used? So there's various different methods that you may have utilized to pay for that general disbursement. Okay? Okay? Now that you've incurred these disbursements, the next slide here really talks about what's next. How and when do I recover that disbursement? One of the first steps that we believe in the process of moving towards recovering that disbursement is ensuring that you've captured on time. So the biggest recommendation law societies provide is to be able to find a tool, process, methodology that allows you and your legal firm and all your colleagues within the company or business to be able to have a process to capture this information when a disbursement occurs, write it down into a system, a notepad, convert that into whatever is a meaningful way for you to capitalize that. Once you've captured that information, then of course it converts into an invoice based on the retainer or engagement letter that you've signed with the client. We mentioned about a differentiation between a corporate client that has a monthly bill cycle versus a private client where you may want to generate invoices and recover these expenses as and when they occur. Okay? And based on whether it's a markup or a markdown, you also want to keep in mind the appropriate taxes that were paid, that were part of that entire transaction. If you've paid this disbursement out of your trust account, then you just pay for it. It's automatically reflected in an invoice just as a line item, as an information to your client. And of course, you draw out of the trust account. There's nothing else to be done. If you have a retainer amount already existing, but you still chose to pay using your general account for disbursements, then it's important that you include that as part of your invoice, reflect it in your invoice, and now you've enabled the eligible amount to be transferred from the trust account into the general account. The third, of course, is where you've paid of the general account directly, in which case you reflect that in the invoice, and of course now you wait for the client to pay you the amount of that invoice. That invoice may include legal fees and disbursements. It may only include disbursements. So there's the three different varieties of ways of what to do next once you've incurred that disbursement. Types of disbursements and why it's an important consideration to keep in mind whether you use the trust account or the general account. Simply put, as I mentioned earlier, if these transactions are based on actuals at a very high level, then it's a great opportunity for you to utilize the trust account. If your firm does not have a trust account, of course, then you'd end up using the general account. If it's billable, both trust and general are great options for you. If you're recovering your expenses on actuals, both trust and general. If you even have outsourced consultants that you outsource a certain piece of work or maybe the entire work, as long as it's on actuals, once again, disbursements could be written off both from your trust, or paid off rather, both from trust and general. But when it comes to unit rate, mileage, or sometimes you may charge for the time of your travel, and any time that the recovery of expense is not on actuals, may be with a profit or a loss margin, then it's recommended that you use simply the general account. Okay, so once again, I'll leave this slide just for a quick second so that you can reflect on it. As I mentioned, it's very much going to be available to you on our YouTube channel next week. So you've incurred the expense, you've done the right thing of capturing it, now documenting it in your invoice based on your cycle of billing, and now you've recovered that expense as well, either paying it directly out of trust, doing the eligible trust transfer, or accepting the client payment. Then comes the final step, which is documenting it in a way that's agreeable to the Law Society auditors. It's based on the bookkeeping's templates and guidelines of how they want you to represent this entire flow and story of how you've captured and documented the disbursements. And that's done through ledgers and journals. During this audit process, whether it's a spot audit or a planned audit, one of the important documents that you want to keep in mind is that of a disbursement ledger. Now, depending on whether you use the trust account and or the general account, you may have multiple disbursement ledgers, both for trust and general. Some of the pieces of information, once again, that we've already discussed that needs to be reflected include the date, the particulars of that disbursement, how much was it for, and a running balance for your trust. Okay. In the case of a general ledger, you'd certainly still want to capture the date. You certainly still want to capture what was it for And now you're capturing the amount along with the taxes paid and the balance owed, which is a running balance as well. So the running balance is a common element across both these documents. A big difference between the trust and general is that you do have a separate column that captures explicitly the jurisdictional taxes that were paid for a specific disbursement in your general ledger. Okay? Then comes the journal. So I spoke about the ledger, and then comes the journal. Similar to the trust and general for ledgers, you do have trust and general for journals as well. And the journal, of course, articulates a different storytelling, has some additional pieces of information, gives you a different perspective of that same story. And this is with regards to, of course, the date when the transaction occurred, who actually paid for this specific item, and how was the specific item paid. If you have actually paid for it, your law firm, then the journal wants to capture the method. As I mentioned, if it's a general ledger, that could be various methods. It could be check coming out of your general account, could be a credit card out of your business credit card, could be personal credit card, right? Personal cash, personal debit. There's many different methods to it. Then it captures explicitly the client and the purpose of payment, and most certainly the total amount paid. Okay. Just like your ledger and journal difference, the general disbursement journal has the same aspects that you captured in your trust journal, which is the date, the method of payment, and who was this paid to. Additional information about what was it for, and then comes the differentiation between the actual cost divided by the amount and the jurisdictional taxes paid. Okay, so really capturing the method is the major difference, if you will, between a ledger and a journal. But it certainly gives you a better perspective, especially when you're scampering at the end of the reconciliation dates, to really know what you missed. This is a great report or a document that allows you to backtrack and really capture the audit trail of that disbursement. Now, the fact that the disbursements are a recoverable expense does make it, and the fact that it does make its way into an invoice also leads to it to be part of the fee book. So the fee book is another important document that's part of your bookkeeping guidelines, bookkeeping compliance needs. And this particular document records all of the fees, so all your legal fees for the time and effort or flat rate fee, as well as the disbursements that have been raised within, these buckets of invoices that you've generated. So as a business, I'm sure you're going to have multiple invoices within a month for many clients, and each invoice, as I mentioned earlier, encapsulates not just the legal fees, but also captures these recoverable expenses, the disbursements, as part of it, because now you're able to recover that money as part of a client payment, and hence it becomes part of that fees, hence becomes part of the fee book. The fee book now gives you the audit trail of what that invoice number is, so that the next time you miss out on a disbursement, you can go back to this document, check the invoice number, open that particular invoice, and make sure that that disbursement was part of that. So hence, the fee book most certainly needs to be documented with the invoice number, the date when that particular invoice was generated by your legal firm. It's not the date when that invoice was paid, it is really when was that invoice generated out of your firm. Going back to, of course, the associated taxes that were collected both for the fees and the disbursements. So you can clearly see this particular example does not necessarily have disbursements billed, but ideally you would have a column that's focused on capturing the disbursements within that invoice. So if 001 actually had, let's say, $213, where $113 was the legal fees and $100 was the application fee, you would see a $100 line item just under disbursements billed. Okay. So before we move into, of course, talking about and maybe using uLaw as an example to walk you through what you should expect out of how you capture it, how you recover it, and how you document it for Law Society compliance, let's do a quick recap of what we've looked at the past half hour. Okay. Once again, a quick recap. Today's webinar that's being recorded and will be available to you as early as Monday is a CPD session with the topic of Disbursements Demystified, where we're specifically looking at the agenda of talking about disbursements, which are essentially expenses that have been paid by your legal firm on behalf of a specific client's matter, talking about the variations in how you approach paying for these disbursements, whether you're paying from trust account, and of course within the trust you have two variations. You could directly pay it out of trust. You could have a retainer but still pay it out of general and then transfer the money from trust to general, or avoid the entire trust and directly pay for these disbursements out of your general accounts. And now within the general accounts you have multiple methods of payments, either coming out of your operating general account, your personal money, or a business credit card, for example, right? And then we briefly touched upon the advantages of paying for it from a trust account, which simply is reduced bookkeeping. It's really not your money. So dealing with it directly out of trust ensures that you're not in the hook to make sure that you're waiting for that payment to be made. Because often we talk about examples where you pay for these disbursements and there's a dispute with the invoice and now you're just waiting, and if you unfortunately cannot recover that expense, then that unfortunately does become part of your bottom line, right? And hence, utilizing the trust account most certainly does mitigate some of that risk of not being able to recover that revenue. And talking about certain candidates when it comes to whether you should use a trust account or a general account, if your business does have both these financial vehicles or accounts to deal with. And utilizing a thumb rule of if it's an actual, then great example for trust account. If it's not actuals, then most certainly entertain using the general account. And then from a Law Society's perspective, we looked at some of those important documents. So ledgers, journals, fee book. So the ledgers have both the trust and general ledger, with the difference being the general ledger most certainly explicitly captures the taxes. The journals, which are slightly different from the ledger, where it does capture the method of payment, which is not a line item or column, if you will, within the ledger. And once again, the difference between a trust and a general journal is that in the general journal document, you do have the taxes captured as well. Okay? And that's what we've looked at so far. So there's these important steps that you have to take, whether you use an automation tool, a legal accounting software, any software that you currently use. It's important that you put it into practice. You have the right process that's defined right across your firm that follows the agreed retainer or engagement letter, the cycle of when to recover, and then right away doing it so, because sometimes delayed recovery leads to not being able to recover it. It also leads to added bookkeeping functionalities, because if, let's say, you paid for a disbursement and you have not accounted for it till the end of the month, then you're going to have to deal with it during your monthly reconciliation. And the reason why we talk about it is that if these are predictable steps that you as a business have to do, And given the nature of your business, if there are going to be more than 1 or 2 transactions within a month, then it certainly helps to have a legal accounting software as one of the options within the many options that you may have that you explore, allowing you the 3 capabilities. Capturing the information, that's step 1, as and when it happens. That means if you have legal accounting software readily available, whether that's on your phone, laptop, internet-based, cloud-based, there's many variations to it. Capturing and recording these events as and when they happen. The next thing is ensuring that the same system allows you to generate an invoice automatically, adding these line items that were already captured so that you don't have to repeat yourself and do that manually. And the third thing a legal accounting software naturally does is that it does give you those bookkeeping guideline documents well drafted. So it converts that invoice, gives you the opportunity to pay for yourself, validates the amount, making sure there are no errors in that. And finally, it translates those transactional line items that were part of the capture, the invoice, and recovery into certain documents such as the ledgers, journals, and fee books that are necessary for you to produce on a monthly basis. So contrast and compare the amount of time, effort that you put in as a firm towards these tasks compared to what would it cost a software that you purchase or explore purchasing. There are many softwares in the market today giving you various pricing options, various tools. If you have a bookkeeper or an accountant, they may have certain feedback and insight and inputs to these tools as well. So do make a well-educated purchase of a software to begin with, but more so a legal accounting software because you're in the business of the legal office. And now we have enough time because typically I spend a good part of it talking about the slides, and we did get feedback that the audience would rather have me go through this one at a time, using certain examples that would be meaningful for the audience. So, as always, we listen to our very good clients and the audience that participate in these webinars, and hence I want to be able to take the next 20 minutes or so to walk you through 1 or 2 examples of how we capture disbursements. Once again, I'm just using uLaw as an example. We are a legal accounting software, of course, and this is one variety of how we accommodate and manage the workflow. As I said, there are many options out there, and you should certainly consider them all and make an informed decision. Of course, within a law firm, one of the first steps that you do, as I mentioned earlier, capturing transactions is great, but giving it a certain relevance is more important, and hence that relevance starts with the client. So let's go ahead and add a certain client. Okay, let's say there's a client, Yasmin. I'm going to skip this whole part of being able to add more information about this client. I'm going to jump this gun for the purposes of today's demo and go straight into creating a matter for Yasmin. Okay. And in the meantime, if you have any questions at all, please feel free to shoot it my way utilizing the chat window that you have within the Join Me product. We'd definitely like to make this a kind of a two-way street where you're able to ask questions. Of course, we would greatly appreciate it if it's within the subject that we're discussing today around disbursements. If you have any specific questions, please feel free to shoot them our way. And let me take my first example for Yasmin as not using trust. So let's get through with the general payment where you're taking the risk, you're paying for it upfront using your general account, and then you have to recover it through waiting for a client to pay you. So typically this happens. We've often spoken to lawyers and paralegals who we serve as our clients, and one of the common sentiment, if you will, is that if they do know the person, if they know the person that they're working with because it's coming from a referral, from a close friend or a relative, then often they do take that leap of faith because they believe in the fact that that client would not cheat them on this payment, or there's an opportunity to recover that expense, higher probability rather. So this is one type of example where maybe you know Yasmin, right? And it comes from a strong referral. And let me take a simple example. So let's say this is a contract, review or contract review. Of course, I'm going to skip through the part where you actually sign the engagement letter. Now, some of these engagement letters, and this is an important aspect to it, can be as thorough, and no one can blame you for being very thorough and detailed, can have this information around your standard disbursement costs. Now, each legal firm has a very standard set of rate card, if you will. Similarly, they have a standard disbursement cost. So, for example, in any legal accounting software, you should be able to capture it in your settings or in some place what these standard rates are. For example, what is your mileage cost typically, right? What do you charge typically for faxes, postage, photocopies, bank drafts, etc. So sometimes declaring this in a retainer letter just builds more credibility because you've been very upfront about what the cost should be that the client should expect from your legal firm. So let's say we have disbursements only. Okay. Again, once again, as part of this demo, I'll keep it strictly to disbursements. So we walk the path of capturing this disbursement, and you have a few options when it comes to the general account. When you're paying from trust, you're paying from trust. Whereas when you're paying from general, some of the varieties that we capture is there an actual? Is it not? Are you paying a third party? Is it a prepayment to a disbursement? So if you're using software that then you utilize and spread across various different clients, and that's a prepayment to disbursement, for example. But I'm going to take the example where you're paying for a unit rate such as, let's say, fax. The fact that it's a unit rate, let's say you had 100 faxes. I'm just making this up. And it's $1 per fax based on your published disbursement costs. And you may decide to charge tax or not. And one of the advantages of the legal accounting software is that not only do you disperse your client, but in the same token, you're also able to tell your own business, how did you pay for it? Now, if this particular fax was dealt with in your office, and it's part of your overall office expenditure, you don't have to explicitly charge your client for that. Okay? So let me go ahead and create one such disbursement. So now we've created a disbursement. We've captured it as and when it happened. It happened at this very moment. And it's available. And now it's $100, no tax, and that's the disbursement of $100 that the client now owes you. So if you do generate a pre-bill, and this is where a legal accounting software automatically converts that transaction that you captured into a document. A preview, of course, in uLaw allows you to make sure that everything looks good within the document. So here is a preview of the fax as a disbursement, 100, the unit rate, total cost, no taxes. And let's continue. Maybe there's another disbursement. and this time we'll say it's a court fee. And of course, within software, one of the advantages that you have, and you have the same with uLaw too, is that once you've typed a certain type of expense, that automatically captures as a smart dictionary. So let's say you have a court fee of $200, once again, no taxes, but this time you want to capture how you paid for it. Okay? This is not a fax that you could have sent from your office. You've actually paid this $200 court fee maybe to the Ministry of Finance or Ministry of Attorney General. And this is where you capture how did you pay for it, who did you pay this to. You can say Ministry of Finance or Attorney General. And then remember, if we spoke about the different attributes of a disbursement, one of them being how did you pay for it? Did you pay out of your operating account? And if so, then of course in today's modern days you have various ways of paying for it. It could be in a check, it could be in a money order, maybe an email transfer, whatever the end party accepts as a payment method. So again, let's keep it the old school way. We'll say this was a check, and now you've recorded 2 disbursements for this file. One for $100, one for $200. That should now reflect as $300 as the total payment that you should receive, so that now you can recover that expense. Okay. I'll add one final transaction, and I'll stop boring you with this example. And let's say this was the application fee. And just for the purpose of this demo, I'm going to say this was $100. This time, I'm going to include the tax. I know the application fee is not a great example because most of these fees do not have a tax. But let's just say for the sake of the demo, because we're capturing taxes, you paid for it. So now who are you paying this to? Ministry of Finance. Let's say this time I will leave it a check. And I hit the save button. So now you have 3 different transactions, 3 different disbursements that are being captured for fax, court fee, and application fee. If this is a real estate matter, of course you have various different types of disbursements, and a system such as uLaw allows you to import all of that right from whatever third-party system you have, Unity, Conveyancer, Lawyer Done Deal, whatever the common tools that there are. Instead of having to repeat yourself, software today's day and age allows you to import them because you do it in one place. Do not have to repeat yourself again in your legal accounting software. Perfect. Now it's actually time to generate a bill. And let me go ahead and generate that bill. I'm going to hit the complete option so that it captures all of the transactions that need to be part of that bill. Of course, choose between many different themes. Let me choose the fall theme. Guess we're not yet in winter, so that's a good thing. And let me go ahead and generate that invoice. Of course, you can backdate invoices depending on, of course, the situation. And I'm going to download this invoice, and let's review it real quick. Now, this is an electronic PDF document that's, as you can see, is downloaded to your local computer. Now, you can, of course, take this invoice and directly email it to your client. Of course, you can use your own letterhead, your logos. This has, of course, compared to the pre-bill, has an invoice number, because the pre-bills typically don't. And it has a total amount. So clearly, as you can see, here are the 3 disbursements: the $100 fax, the $200 court fee, and now this time you have $100 plus the taxes of 13%, because we're assuming this is in Ontario. If it's British Columbia or any other province, those jurisdictional taxes would automatically apply. And you can capture that at the time of disbursement captures. So that's the amount owed. You send this to the client. And again, the assumption was we knew Yasmin, and then she was going to, of course, pay you you diligently, and once she does, very important, because that's yet another financial transaction that is waiting for you to capture. You enter all of the same attributes. So when was that paid? How much was the amount? And you need software so that it can restrict you from not accepting overpayment. So even if I type in 450, unless it's a retainer that's being accepted, it should not allow you to accept more than the money owed. Let's do the old school way that they gave you a check. And now you tell us, where did you deposit that check? Because that's important from a reconciliation standpoint, because we want to know which account should we reconcile. Can give the client a receipt, always a good habit, so that everybody is now happy with the payment made and the payment received and the receipt provided. So you've captured it. You've translated it into an invoice, giving you the ability to recover it. Now comes the final step in our presentation, which was being able to show this in the form of the, this really is just a receipt. I'll take just a quick minute to walk you through the receipt, which is a very important component of any payment, is to provide that client the receipt. Okay, so it gives you the receipt number, who was it received from, what was the matter about, and how did they pay for it. Alrighty, so now comes the final aspect, which is being able to take all these transactions and these numbers and attributes of these transactions into the appropriate storytelling to your auditor and the law societies, whether you're in any part of Canada. Here comes the fun part, where legal accounting software, especially uLaw, allows you to then automatically translate this into these ledgers and journals that are required as part of the compliance. As I mentioned earlier, ledgers, journals, and let's look at the general disbursement journal. I'm not doing this for a specific client. I'm doing this for the entire month of October. So, of course, going to include all of the different clients that I've paid these disbursements for. And if I look at this disbursement journal, you can clearly see that I paid the Ministry of Attorney General a court fee for this client, Yasmin Thomas. That's her file, 203748. Right, so 203748. The $200. And in the case of the application fee, as an example, we did capture the $13. Okay, so the method, it was a check. This is 56781234, and you're done. Okay? All right. Now let's look at the fee book. Let's once again do it for a time period. Let's quickly look at the fee book that we just generated for Yasmin, or actually for the legal firm of Roger Moore. And if you really look at right at the bottom, here are the three disbursements that we incurred for Yasmin. Okay, so you have the disbursement of the application fee, the disbursement for the fax of $100, and the $200 in court fee, automatically translated from that invoice. Same thing with the general ledger. The general ledger now categorizes it by the specific clients that you have in that date range. So whether that's monthly, let me just choose monthly again. Both these other documents, if you look at the fee book, the expense journal, this is across the firm, whereas if you look at the ledger document, the general ledger in this case, it's by the different clients. And let me search for Yasmin Thomas. There she is. And there you go. So the three transactions where you have the amount, in this case you have the amount with the taxes of $13, a running bill. So the disbursement of $100 and another $200 make it $300, and another $113 making it $413. And of course, because for the purpose of today's demo, I made all of this happen the same day, but in real life, this of course could spread over time, and so would the dates. They would sometimes just be spread far across. Now here is the transaction where we've captured the $413 having been paid through this check that Yasmin provided us, leaving now a zero balance on this matter. Okay, so the legal accounting software gave you the ability to capture these disbursements as part of a matter, allowed you to convert that into an invoice including those transactions, allowing you to accept the payments, and then finally converting all those financial transactions that were captured into meaningful ledgers, journals, and fee books. Okay. Now one step further, and the last step at that, is the reconciliation in itself. So as part of the general reconciliation, which is something that you do on a monthly basis, not only does it leave it at that, it also includes these transactions as part of your reconciliation. Okay? So you can clearly see the transactions and the deposits. Okay? Now the fact that the $100 was something that you had not expensed is the reason why that is not part of this. Because that was paid out of the operating expenses and you did not explicitly, though it's a disbursement, it was not a direct cost for your business to reconcile. So now is where you go ahead and say, all right, yes, I did pay for it, and yes, I did get the payment, perfect. And that's how you go ahead and reconcile. We, in fact, allow you to reconcile preview on a more regular basis so that you can stay on top of these numbers. So instead of reconciling it, you can just generate a general preview of it, making sure that you've validated that these transactions do exist. So that's the complete flow where a general disbursement was involved, what you expected as a legal firm to do in order to be compliant, but also making sure that you recover this as part of your revenue. Okay. Then I'll also add this final caveat to this whole transactional documentation, including the expense book. So the expense book also captures, as I mentioned, this is a recoverable expense. Though it's a disbursement, it is an expense that you've incurred. It's captured automatically in your expense book as well. So here is the court fee of $200, no taxes, and the application fee of $100. It doesn't end there. It also is part of your overall P&L. It's part of your taxes. So keep in mind that a single data entry has multitude effects on various different components of your business. Okay, so for you to know how much of tax you've collected from business, especially if you are dealing with jurisdictional provincial taxes, you collected that $13 as part of that disbursement. Now, that needs to be reflected. Not the law society, but it's certainly the CRA that's curious and wants to know the taxes that you've collected, and the taxes that you've paid as part of running your business. Okay? And as you can see, for that disbursement, for an application fee for Yasmin for this file, here's the $13 that was collected. So you have at least 8 to 10 different documents automatically available for you to just generate and keep ready and stay compliant right from day one. I will pause for any questions that you may have at this particular time with another 5 or 6 minutes remaining in our webinar. I certainly wanted to talk about the general components of disbursement because in all of my previous webinars where I touched upon disbursements, I have specifically focused on trust. You could most certainly search up our YouTube channels and search up the title Disbursements Demystified, and you would find when I conducted this webinar maybe several months earlier, I had taken the example of a trust transaction. And often I got the feedback that a general transaction was not being showcased, and wanted to make sure that I used today's opportunity to showcase that. So please feel free to use the chat window. So there's a question around the trust transaction itself. So if I were to take the same matter, again, just following the money, if you did get that retainer for, let's say you've got a $250 retainer as a check, and then you put that money into a trust account, okay? Now, you can either pay for that disbursement, the next disbursement that comes your way for this file, directly off your trust account. So that's where you can pay for that new disbursement directly from the trust account. So you can say, here's the $150. I'm writing yourself a trust check, and this could be certification fee, okay? Ministry, I'll just say ministry office. Now this is where the disbursement is directly paid from your trust account. So you're going to notice that the trust receipt would automatically drop from the $250 to minus the $150. So it dropped to $100. So that's all that's left in that trust amount money for this particular client, right? And it should automatically reflect across all of the documents that reflect this. So the storytelling, once again. The fact that you are dealing with your numbers on a daily basis gives you that advantage for knowing what's happening. An auditor, of course, does not have that luxury, and hence reviewing the documents is how they can do this. So that's how it gets transacted, if you will. I hope that answers that question. Okay. Are there any more questions for me today with regards to disbursements or anything specific that we spoke about? Any further questions at all? All right, if there aren't any more questions, well, I certainly thank everyone who's joined me for today's uLaw webinar. The topic for our webinar today, again, was Disbursements Demystified, which is for a 1-hour CPD session in the provinces of Ontario, New Brunswick, and British Columbia, and will be recorded and available to you as early as Monday. Thank you, everyone, for joining us today. Have yourself a fantastic weekend ahead, And we look forward to seeing you in our next webinar, where we talk about many of the practice management tools of the product, uLaw Practice. And we'll talk to you next week. Thank you very much.